Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that the US dollar index across the board has caused havoc with a lot of the markets. Starting with the Australian dollar, is that the bearish cloud has darkened over the night, with the pair losing as much as 1.4%. From the heavy tumble, the market now challenges the recent 13-month low, which is at 73.28, after posting a low of 22 from the previous night's session. It is viewed that the market now tackles the next support level, which is at 73.20, with the objective holding at 72.55. From a technical point, we're not oversold. We are actually maintaining to a bearish case. Therefore, I do expect to see a return of bears in greater numbers and look towards that region, with the resistance coming in now at 73.65. Euro overnight tumbles further and now takes on the challenge of 115.40 as minor, with the key level beneath at 114.85.95. It is viewed that a break there would give further access to the downside and bring in an objective of 112.80, so do keep an eye on that. The other flip side is that the US dollar index is challenging the recent highs of 95.20. Now, a sustained break above there would expose further risk to a bullish US dollar to a target of 97.98, which would also coincide with the 112.80 objective for the euro. Resistance at stage on an intraday basis is at 116.15 to 116.65. I still maintain my bullish view that the dollar yen case can still get to the region of either 110.45 to 111.10. It is viewed that dips are still a way to play in terms of a strategy towards 109.65, with a base now holding at 108.90. It would seem that the pound lost its momentum over the last few days since its bullish outside range day from last week. A couple of comments from the Bank of England has slightly put further risk to the downside. It would seem that some of the comments from Mark Carney began with global trade tension has intensified, along with global risks could crystallize long-standing risk of a snapback in interest rates. This has put a slight bearish sentiment to the pound and now looks towards the region of 130.65.70. Only a break beneath there would negate this outside range day and put further stress towards a potential target of around 128. So do keep an eye on that. But if we do see this outside range day negated, that we would see further heaviness. Along with the US dollar, it doesn't look too shiny for the pound at the moment. So let's see how the market plays in the next 24 to 48 hours. Resistance is now seen at 131.80.90. Well, the gold outlook slipped lower overnight, taking out the 1,255 support, and now exposes the region of the lower side of the case of 1,220. I'm a little bit careful of this call though, because we are oversold. Therefore, any turnaround is actually quite seen in terms of a move towards the region of 58.62 to 68. So do be on your guard if you are trading from a short side, that the fact is we can still see a snap to the upside. Looking back to the support, intradays at 12.48 to 42 now. And rounding off with oil, well, the market rallied even further overnight and adds an extra 3.2% from its previous 3.83 from the prior day. Now reaching its target near enough at 72.80. Now questions whether the market can break above this level. If it does break above the May highs, then we could see a round of momentum taking on the challenge to $76 a barrel. I'm a little bit skeptical of this move, as it's come through very, very quickly on the back of nervousness in terms of across the globe of the fundamentals. Support of the day, however, is seen at $71.20 to $70 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.